Hi everyone, hope you had a great week. This is Victoria from crushcrypto.com and welcome to this week's market update on the crypto space. Let's take a quick look at this week's cryptocurrency movements. Bitcoin fell another 14% over the week and is down by around 27% since it floated above the $5,000 mark just a little over 2 weeks ago. Prices actually dipped below $3,000 temporarily on Friday, but has since recovered by more than 20%. Ethereum ended the week with a 16% decline and is now hovering at around $250. Similar to Bitcoin, prices went below $200 on Friday, but has since recovered by almost 30%. As we had expected, the cryptocurrencies with heavier Chinese volumes were hit harder. Litecoin and Ethereum Classic lost 27% and 33% in the past week. The crypto market has lost around $50 billion in the past 2 weeks as China continued to spook investors. But their influence on the overall market is probably diminishing. In January, China made up over 90% of all Bitcoin transactions, and now it's down to about 12% or so. The tokens didn't fare well this week either, with the market leaders JPMorgan and Qtum down 19% and 38%. But the market seemed to have found an inflection point as token prices have surged significantly since Friday. JPMorgan and Qtum are up 48% and 40% so far since it hit bottom. Basic Attention token outperformed with a weekly gain of 1% and is actually up 17% in trading so far today. This is partly due to some people saying the token is highly undervalued, which helped pump the token. For veterans in the crypto market, this kind of price volatility does not come as a surprise. All this action in recent weeks is probably making some short-term traders money. So on to the major news in the crypto market. There was more drama from China this week that sent the crypto markets into turmoil. Just last week, I was talking about China's ICO ban and how the worst-case scenario would be China banning cryptocurrency trading. And that's what we saw this week. Two of China's largest Bitcoin exchanges, Huobi and OKCoin, announced that they will end yuan-to-crypto trading by the end of October this year. The exchanges will continue to offer crypto-to-crypto trading services, at least for now, but they have already halted yuan deposits. This news comes after other Chinese exchanges such as BTCC announced that they would be closing their doors. In our view, this news is probably going to cause most of the casual Chinese traders to leave cryptocurrency trading, as they won't have a reliable gateway to convert their crypto holdings to fiat. As the worst-case scenario already happened, it looks like China will not be able to do much anymore about banning cryptocurrency. The last thing that they can do is to cease the operations of Bitcoin farms in China, which seems unlikely to us at this point. China's trading ban would affect various cryptocurrencies in different degrees. This table here shows the yuan-denominated trading volume as a percentage of total trading volume for select cryptocurrencies. As you can see, the trading volume for Bitcoin and Ethereum in CNY makes up less than 15% of total trading volume, while CNY has a much larger influence on the trading of Litecoin, BitConnect, and Ethereum Classic. In Thailand, the Securities and Exchange Commission issued a new statement on ICOs saying that some token sales may be defined as a securities offering. The regulator stated that they encourage access to funding for businesses, including high-potential tech startups, and realizes the potential of ICOs in answering their funding needs. But if an ICO is involved with issuing securities, it would fall under their regulation. This latest announcement essentially echoes the announcements we've heard from securities regulators around the world, including Canada, the US, and Singapore. In an interesting turn of events, a Chinese official was quoted on national TV that China's ICO ban is only temporary and licensing will be introduced. During an interview with CCTV, Hu Bing, a researcher from a Chinese government-supported academic research organization, stated that the government's ban on ICOs was only temporary. He emphasized that the government had not forbidden ICOs, but had paused them with the intention of resuming them in the near future. Local financial regulators will introduce necessary regulatory policies for both ICO investors and projects. The government is looking at the potential of allowing ICOs to raise money through some sort of licensing program. Meanwhile, citizens in the Swiss municipality known as Chiasso will soon have the option to pay taxes using bitcoins. The government announced that it would take bitcoins to settle up to $265 worth of tax bills starting next year, and as part of a bid to attract more cryptocurrency startups to the region. The town wants to brand itself as an alternative to Crypto Valley in Zug, Switzerland, which is known as the Crypto Silicon Valley. Switzerland continues to ramp up as a global hub for fintech and crypto startups. JPMorgan CEO Jamie Dimon sure stirred up a storm this week in the crypto market after he said that Bitcoin was essentially a fraud. He was quoted at a conference to have said that Bitcoin was not a real thing and it would eventually be closed. Dimon also said that he would fire in a second any JPMorgan trader who was trading Bitcoin because of two reasons: it's against our rules and they are stupid. Bitcoin supporters of course fought back, leading to some very interesting and heated debates on the value proposition of Bitcoin and cryptocurrencies in general. Dimon's comments are probably a reflection of Wall Street's stance on Bitcoin, which is seen by many to be a threat to the traditional banking industry. And that concludes our weekly update. Thank you very much for watching. If we have missed anything notable, or if you have any comments on what's happening in the market right now, please leave us a comment. Hope you have a great day and we'll see you again next week.